Hello and welcome to theCUBE Pod episode 93. We are live here at the New York Stock Exchange, our new studio. We're opening up today, live streaming. This is our inaugural live stream here. I'm John Furrier with Dave Vellante. Dave, salute to you. We're in person.
Real time, brother. Nice job.
We're in person. This is theCUBE Pod. We are in our new Buttonwood Room podium overlooking the floor here where the old American Stock Exchange used to be. This is our permanent set. We also have our balcony looking over the show floor. The two sets, second largest footprint for an independent media operator on the show floor behind CNBC. First podcast style franchise here at the NYSE. Huge accomplishment, Dave. And in recognition, NYSE had Media Day today. They brought in over 200 leaders in media organizations, Time Magazine, Reddit, SiliconANGLE.
SiliconANGLE, theCUBE.
We were featured in the keynote with Brian Bauman and Lynn Martin and gave a great speech. And then I rang the closing bell for our team.
It's amazing.
They had one spot. I had there, Dave. I got there first.
You were prominently displayed. Oh, good for you, man. That was great to see you up there. I was down below taking pictures. We got a great shot. I think you must have put that out somewhere. Somebody did.
I put it on LinkedIn. Check it out. It's a live stream. We have to show actual footage. We'll play that later. We'll come back to that. But I think really the key story here is this is our studio. We'll be broadcasting here, doing a lot of podcasts. I might even settle down and finally get to do my podcast again. Dave, you have your own podcast, Breaking Analysis, which is phenomenal. We have the CUBE Pod this, but I think there's room for one more. I'll host either here or Palo Alto, but the New York Stock Exchange made some significant news announcements today. Their entire team, led by Joe, who runs content communications and the entire organization, the media, they launched the media network and they essentially had all the press and said,
400.
Do what SiliconANGLE's doing, come in, tell the stories because stories are made here at the New York Stock Exchange. The venue's phenomenal and they get media participation because they want to open up the NYSE network and all the prestige and tradition over 200 years is here, and they want to bring that to the media and share. They're sharing their franchise, and it's very transformational, not transactional. Of course, they make business with IPOs. They make business with ICE, their parent company. Great business. ICE is over billions of dollars they make. Killer business. Lynn Martin, NYSE, changing the game. NYSE under Lynn Martin is clearly transforming the brand into a modern era where the prestige and tradition of theCUBE is now a transformative brand, and they're opening it up to the community of media providers and creators, and that's just going to create more integrated relationships. That's going to move the conversations and the stories that are here and outside the walls of the stock exchange out into the market and then back in again. It's going to be a circular loop of greatness, and I think it's a super smart move and super proud to be part of the founding kind of NYSE Wired team, powering the Wired team, but also as they bring in other peers, Time Magazine, Time Inc., and USA Today, Reddit. X was here. I was standing on the podium next to the person who runs partnerships for X. But it really is a testament to our culture shift, and the NYSE has been the intersection of culture and capitalism in their history. So again, prestigious, traditional, blue chip brand transformed into a disruptive enabler with content by just leveraging the relationship that I already have and also the stories that are developing here in real time, all the time.
Yeah, and theCUBE is center to that transformation, working with Brian. And we had, first of all, it's great to be in this studio, right? We are doing our thing, and a month ago, they said, can you be up and running? We're like, yes. So
Axios was there, the information, Money 2020, Cheddar, FinTech TV, CNBC, Female Quotient, FQ. But Dave, I got to say, it was a proud moment because, SiliconANGLE and theCUBE has risen in brand to mainstream our commitment to tech coverage and deep dive podcast style, but yet mainstream. It's being recognized by the community, and our footprint here is just going to continue that mission. And the market has shifted. People want content. I think there's going to be a AI-generated content boom, and I think people are going to have fatigue of shorts, and I think it's going to be the flooding of content. It's just going to be like search,
Well, think about
and the curation and deep dive content is in a long form.
two of the guests we had today. You had an amazing crypto guest, crypto billionaire. I had Jim McNeil on, who's doing energy, nuclear fusion. We had a master class on nuclear fusion versus nuclear fission. It was amazing. I mean, that's the kind of content that we've been developing here.
Dan Taparios, co-founder of, he's got this huge network. He's invested in, he's got 5 funds, okay? He's got this $50 trillion. He believes that's going to be a $50 trillion opportunity. Bitcoin alone will hit $20 trillion market cap, he believes, the market expansion. He's got all kinds of bets. One round table is what he's got. And again, there's a liquidity maturity going on in crypto.
What did he say crypto, Bitcoin's market cap would be?
Bitcoin alone will hit
What did he say?
20 trillion market
20
cap.
trillion, and it's right now 2 trillion.
So that's a 10x.
10x. I believe that.
Yeah,
You
and
believe
so-
that?
yeah.
I think it's going to be a 10x.
When he got into Bitcoin, it was like a $300 billion market. Now he thought that would go to 30 trillion. He's upped that to 50 trillion, or 10 trillion. Went from 300 to 10, and then now he thinks it's going to go to 50. He's an ex-hedge fund money manager. He's smart, and so he's got a lot of plays. And with Trump in the White House, okay, it's going to be a massive surge of exit. And now what?
Not only Trump, but Sachs.
Sachs, the tech crowd, there is a huge cultural demand. And I think putting Trump aside as a person, the vote itself, the mandate from the culture, if you're under the age of 30 and you're looking at your country and saying, why aren't they doing more with crypto in terms of capital, fundraising, liquidity? If you're under 30, I wouldn't want to live in this country, because this is the future, and it's so obvious to everyone that knows what they're talking about. And it's like, it's going to happen. So the question is, it will happen. And then the question is, okay, how does the NYSE and the market create the requirements, the fundamentals, liquidity, investment, a whole cycle of
community content?
This guy Dan is awesome. All our friends in crypto that we've been covering, this is now the time, the maturity of, I call, first generation market dynamics. And let's face it, there's not enough crypto companies public.
Yeah.
And so we got to get a couple wins under the belt on the crypto world. So clearly crypto will be a market force, a marketplace will develop, and you're going to see entrepreneurship flower, you're going to see M&A happen, you're going to see capital markets. Again, Lynn Martin
Think ICOs will come
said
back?
culture and capitalism coming together.
Think ICOs will come back?
I think stablecoin will probably end up becoming the key.
That's a good call.
Key stake in the ground.
Stablecoin.
Peg it against the dollar, and then let all the fluff be volatility. And like the market here, it's volatile certainly.
I think that's a good call. Start with stablecoin.
Yeah.
Pin it to the dollar, and then let other flowers
Yeah.
bloom from that. By the way, just to go back quickly to the NYSE, you shout out to Brian Bauman, shout out to Trinity as well. Trinity Chavez gave a little speech.
Yeah.
Should be partnering with those guys. It's
NYSE Wired is the catalyst for a lot of the change at NYSE, and that's the testament to Brian Bauman, Trinity, and the people in the community. And again, Ian and the team. I mean, the production was phenomenal. Again, look at this whole community is booming, but it's a transformative moment. You can see the energy in the room. How this translates post-event, we'll see. But the NYSE launching a media network, it's like the NFL having TV. Like, of course, it's the game.
Yep.
And we're ESPN of tech. That's what we do. Now, others will come in and do their thing. USA Today, we had a great conversation with the people from that organization. They're going to do their thing. FinTech does their thing. So it's going to be a media tsunami and a media transformation as well, because the way the media has been doing their business, I mean, if you look at the dominant paradigms over generations, like media, they're being disrupted. Every single vertical with AI and distributed decentralized computing, like with crypto and blockchain, these dominant paradigms will be disrupted. A new window of opportunity is going to be created by relationships, serendipity, propensities to make change, interactions, digital, physical. Radical change is coming. It's a living community that's emerging on top of this social network, and certain patterns are going to form, and those transformation patterns are going to endure over time. They're going to lock in. So I think we're going to see media change significantly. And again, we are lucky that we are vectoring into it with our formula, because we get lucky sometimes, and you make your own breaks, but I got to say, the market for what we do is great. So I want to shout out to the whole team and say thanks to everyone, and psyched to be involved. And again, being recognized by the NYSE.
Well, basically what we saw today, I mean, the community here, and it's not only, people think it's just public companies, it's not only public companies, it's private companies, it's the VC community, it's the private equity community, it's the legal community, it's public policy through governments. I mean, it's a huge and rich ecosystem and very powerful.
I mean, I like to look at the media. I'm on this whole rant. I've been on this kind of like abstract thinking concept around why media is changing. The traditional organizations, the dominant paradigms I mentioned, they were based upon normal causality. Right news, it gets distribution. Causality and things the way they were described and explained in process is going to be changed by new propensities and new interactions. And the status quo and the natural laws of order aren't good at explaining the transformation change happening. And I think the new thing is these unique parties coming together, new relationships forming in serendipity in real time and interactions. These unfolding events and interactions cause growth. And I think the market has been asymmetrical. Disinformation has been dominating. And just like cybersecurity, Dave, when you have asymmetrical environments, like the bad guys attacking us, the good guys got to fight. And I think with AI, you're going to see media start to lift up that more truthful, voices of freedom will emerge, and like the asymmetry between misinformation and bad media will be disrupted by positive growth through communities. I think NYSE is a future tell sign to support our vision of more volume, more content, more voices to bring up that level up against, content out there that's quite frankly misinformation. So
a lot of new media here today.
Arbitrage is going to go away and new laws will form, new ways of doing things. So all fun, all great, all good.
So what else is happening here? Intel vultures are circling, Rob says. The body parts, Altera, they're splitting that up, of course, Intel Capital, we know that. Jim Keller put something out basically saying this is a shame. There's a fire sale. And it kind of is. And I'm really against Intel selling the design business. I think that has to, I think the government should really try to stop that. Jim Keller said, you build value by having a great goal and a team that loves working toward that goal. Intel built the fastest CPUs and the best process. This is not unlocking this being the sale, if it actually is true. This is not unlocking shareholder value. It's a fire sale. I could not agree more. Get rid of Foundry because the long-term value might be there, but near-term, next 5, 7, 8 years, there's negative value, at least for the first 5 years. And Intel Design is it's like at the low point now. This is the last point that you'd want to sell. This is sell low, buy high. Bad move. Right?
Is it supposed to be the other way around?
Yeah, it's supposed to be the other way around.
Buy low, sell high.
I think so. I mean, that's how this place was built.
I know. I shouldn't laugh. It's not funny.
No,
it's sad actually. So, I love Intel. Been a huge proponent from what they've done in the industry, and I think the government should make a bet on Intel and save Intel. I know you might be against that, but I think with the whole geopolitical
no, I'm not against
thing,
that.
You're not.
No,
oh,
no.
okay.
In fact, in my scenario, I said that the government should redirect the CHIPS Act and put, 20, 30, 40 billion into Intel Foundry. They should block any sale of Intel Design and say, no, you got to stay independent. And then I would give TSM, maybe have TSM throw in some dough, but more importantly, put in some IP and some skills. And I would give them a bigger chunk than this 20%. I would give them north of 30%, maybe even 40%.
Right now, the CHIPS Act rewards TSM $2.5 billion for every factory they open.
Yeah, well, it's
so
not
it's
enough.
kind of it's like an incentive.
It's not enough. It's like,
I know. But they're spending like $65 billion.
Like less than 10% of what it costs. But the value that TSM brings is they know how to do this hard stuff, and if they bring skills and IP, that's compulsory. That has to be part of the deal. The quid pro quo is they get a big chunk of the business in the joint venture. So I'm proposing a joint venture, and I think private equity puts in debt financing, and maybe it's a little bit of equity for some favorable terms on that debt financing. And then the other piece of that puzzle is that the big hyperscalers plus Meta plus NVIDIA plus Apple put in guaranteed commitments. They have to take and pay. They have to pay and take. So they got to commit $5 billion each, at least, and then they got to take whatever wafer quality they get. If it's not great quality, too bad. You just got to do it.
Well,
and then eventually, why would they do that? 2 reasons. One is they'll get priority access to advanced chip making onshore. The second is the government should be clearly signaling with these guys, we're going to take our foot off your neck. Can't break the law, but we're not going to break up Google. We're not going to keep attacking, Amazon and Jassy. We're not going to file suits against Microsoft. You guys do your thing, play by the rules, and we'll back off a little bit, but you got to put in $5 billion each in the form of these commitments, at least. So that gets, you add all that up, with the private equity debt financing, Intel Foundry gets close to $100 billion. Okay, almost just under $100 billion, which is a start, by the way. That's not enough, but it's a start. Okay, and then, the government supports it. The hyperscalers and the internet giants support it. Yeah. Private equity supports it. The U.S. military supports it.
I mean, Dave, this is like interesting, and I heard from some sources that your memo or your post was circulated around the Trump administration. So clearly you called this. I mean, first of all, not to pat ourselves on the back or you on the back. I mean, I love doing that anyway.
Furrier too.
But
Furrier called this
David,
years ago.
You nailed this, and you were on this. And when you wrote that first post, I remember some of the reporters were calling me up saying, I want to check in on Dave. I think you had some direct Wall Street Journal interactions. And again, this has kind of been out there. And the newsmakers out there are covering this. It's a legit story being covered, and you have your fingerprints all over it. I got to say, no one else was talking about this.
Well, everybody was saying how great Intel was doing. Oh, Intel would announce, some new chip and, oh, Gaudy's looking good. Or, you saw what happened with IDM. When IDM 2.0 came out, we were really negative on it, saying that's not the scenario that we would have preferred. All the sort of experts were saying, this is Intel's next chapter. Jim Cramer even called a low on Intel, which was shocking to me. And all the industry pundits and the analysts, you know who they are, would attend those Intel. Hey, credit to Intel for great marketing, but at the end of the day, the economics, we've said this a million times, the economics just didn't work. Their costs are 35% higher than TSMC's to get, to wafer scale production. Their time to market is a year behind TSMC. Everybody talking about 18A. 18A is fine, but it's not going to be profitable. 14A could be a game changer, but it's super risky. With those 3 things that we always talk about, gate all around, backside power, and EUV, or NAEUV, those 3 things coming together are very risky. And so we kept saying 14A is going to get pushed out. Well, 18A got pushed out. So, 18A, fine. But look, the Intel design team has to have the freedom. It's going to be like shackles off their wrists if they're able to, not have the foundry drag anymore. Let the government and TSM deal with that hard problem, and let Intel designers do what they do best. I think Intel design will thrive, because here's why. And you know this better than I do, John. They have great people. They have an amazing ecosystem.
Yep.
Right? They created the PC industry. And all the software that runs above it. They created wireless, right? They mobile. Everybody says they miss mobile. They didn't miss mobile. They missed smartphones. They didn't miss mobile. They created mobile, and they have an ecosystem around that. They are a standards creator. They're an ecosystem supporter, and I would just hate to see them get consumed by Broadcom. We know what would happen if Broadcom.
It's a yard sale.
And then or Qualcomm, or anybody else. I just don't think that is the best outcome. And I guess the other thing I would add is I really think it's super important that we have not only onshore manufacturing, but that is a U.S.-based entity, and that we have Intel be independent. It would be like IBM getting acquired. I mean, that just can't happen.
Yeah, it can't happen. I agree. In other news, not to jump on, let's talk about Amazon for a second. 2 Amazon stories I want to talk about. One is the discontinuance of Chime, which is their kind of version of Zoom. But Bloomberg's reporting, no, CNBC's reporting today that Amazon's quarterly sales for the first time surpassed Walmart.
Really?
Yes, yes.
Wow.
187.8 billion compared to Walmart's 180.5 billion. So remember, Walmart killed all the mom and pops, rolled into the towns, did their thing, the Walmart factor. Big fan of Walmart. Again, great efficiency, great supply chain. Amazon, the
Good
book,
tech,
the
really
books,
good tech.
we had many great leaders from Amazon's labs and Amazon Tech on. Walmart. Amazon, the bookstore, Dave.
Yeah, bookseller.
The bookseller is now bigger than Walmart.
Walmart, by the way, is kicking ass. I mean, don't.
Yeah, I mean,
they're not
dying. But the point is, the rise of Amazon, their e-commerce. Obviously, we know the margins there, but AWS again, continuing to do it, and they're bringing that Amazon. I mean, Amazon is a digital culture brand, and Andy Jassy, congratulations to the team. So that's the e-commerce.
Remember that memo that came out? Was it last fall? I forget what we goofed on those.
Oh, it
guys.
was a hedge fund, or no? It was what was it? Not Elliott. Not Elliott.
No, it wasn't Elliott.
It was,
but it was like those guys. But it was like Elliott without a brain, and they were like, "Give us more money, and you should do these 7 things." And Andy Jassy took over, and the stock's been down since. And of course, it was such nonsense.
Yeah,
He took over at the peak.
Well, we crushed that.
He took over at the peak, right? And Bezos stepped down right at the perfect time. Jassy has done everything right. I mean,
first of all, that memo was a troll, and they should be embarrassed right now.
They look like idiots. I mean, the call that they made. Of course, I'm sure, Amazon ignored it, but still, but it got some press. Remember?
Yeah.
And all they wanted was Amazon to do stock buybacks and dividends, which, I'm kind of a fan that they're not doing, aggressive stock buybacks and dividends. They got capital to do it, cash to do it, but. I'd rather see it. These companies I'm not necessarily down on buybacks like Liz Warren is, but if you don't have something better to do with your cash than to give it back to shareholders, that says something, right?
Yeah.
And Amazon's saying, no, we have better things to do with our cash. We're innovators. Look at Dell. Dell sends a lot of money back to its shareholders, which is why the stock's doing so well. But it basically says, we think this is a better use of our cash than investing in risky tech. Companies like Amazon say, no, we're going to roll the dice on tech. And so that's how innovation happens.
And of course, Amazon likes to shut stuff down when it's not working. They hung on to Chime as long as they could. Chime, for people who don't know, is Amazon's internal video conferencing tool. They try to sell it as a service, but they use it internally because Amazon's very tight on AppSec review, which is application security, and didn't want to use Zoom and other stuff because they have proprietary data. So they're planning on plan to end support for Chime video conferencing tool on February 20th. That's in 2026, a year from now. And they're adopting Zoom as the standard app for internal meetings.
Really?
So that's the news.
I didn't know the Zoom news.
So
I remember, it was like during COVID, I was like, Chime sucks. And then you were like, no, it's actually getting better. And you're right.
It got better.
It got really good. And now they're going to kill it. But how do you compete with Zoom?
They what, 4th or 5th player in that market?
Yeah, you got Zoom, you got WebEx.
Well, then they're going back face to face, right? So in the world, I think might have Zoom fatigue, video conferencing fatigue. And we're seeing.
You're right. They didn't have to pay licenses. They didn't have to pay licenses. A huge company working remote. You're right.
I think people generally would admit that Zoom fatigue or video conferencing fatigue happens. You could get lulled into it. And we had that Jamie Dimon meme that went around where he went on a rant. For the folks who didn't see it, Jamie Dimon went on a rant and a leaked audio, and he was dropping F-bombs and basically saying people in Zoom talking shit about each other on text, but in Zoom, they're not showing up. The Zoomers don't show up. And essentially saying the productivity is so bad, he was having a boomer moment where hey, what the fuck? Let's get back to work. Of course, people are offended by that, but I think he's onto something, and I think generally the digital relationships that are going to be online are going to be less transactional, like show up for a meeting, and much more intimate, relationship-oriented, face-to-face, converts to digital. So I think we're starting to see that collision and the intersection, the nexus kind of linking together where face-to-face relationships turn into first-party digital connections. And then you're going to have a second tier of transactional, hey, I know each other, yeah, let's do stuff, turn the camera off. That's just kind of moving things around. But I think you're going to start to see that. We're already starting to see in our data. But anyway, I think that's the tell sign there. Other news, OpenAI's...
Before you get off of that, I think what has happened, and when we were in COVID, it was like, okay, it's going to be remote forever. What happened was people realized, particularly from a selling standpoint, that their high priority prospects, face-to-face, is a winning model.
Yeah.
But some of the lower priority stuff, yeah, I can do that over Zoom.
Yeah, I agree.
And that's what's happening. So you have as much face-to-face as we ever had.
Yeah.
But now you've backfilled, with some of the lower priority stuff, or top of funnel stuff, with Zoom calls, and you nurture that. And I don't know, we probably spend a lot less time doing chalk talk, by the water or chit chat by the water cooler, which we used to do all the time.
Well, I think that's what people want. They want to come back to those, so that creative brainstorming, sparking, the serendipity, that propensity to interact, will interact more and cause more, sparks of innovation. And I think your point about COVID's right on. I mean, I've been saying for a while that the younger generation, they're digital natives. They know how to do remote, and they know how to do the face-to-face. But anyone who's a Gen Xer or Boomer or even Millennial, when face-to-face was the only way to do things, that's where you learn, that's where you met people, that's where you had interactions, look people in the white of the eyes, you talk, and then you connect with the phone, you connect with email, you connect with instant messaging. It's kind of virtual face-to-face, but then you had video conferencing, and then COVID trained everybody. We're now, 4 years past COVID, say 3 years fully running, say 2 years full steady state post-COVID. That means we've all been on the Zooms. We all know what it is and isn't. Yep. And I think as we look at events this year, theCUBE certainly, they're back. And they're at the highest level, if not higher than I've ever seen before, because the face-to-face relationships is the scarce resource.
And many of them are different. There's still some companies, certainly Amazon, Dell Tech World actually kind of interesting, but they've dialed it down a little bit. Snowflake still goes for it. Databricks still goes for it. Oracle's dialed way down. You were at Salesforce last year. Yeah. Was it as insane as it used to be?
Yeah, it was insane. It was massive.
So you sort of see a bifurcated, physical events. Some are still going for it. Others have sort of dialed down and realized they can spend less.
Well, not only spend less, it's efficiency, but if you have a hybrid model, the face-to-face event is not only a relationship building event, but it's also a communal festival get together, right? So it's like when you go online, you know someone, and you meet someone face to face, hey Dave, good to see you, and you have cocktails, or you do something bonding together, whatever, play some sports or do something active or whatever, or just chat. Once you go digital, you can nurture that, but the sooner you get back face to face, that rekindles the connection. So it's like we're in these graphs and these network connections. So hybrid works with face-to-face. So you see the best companies, they do that are virtual, by the way, it still works. They organize events, team get-togethers where everybody's together. Why? Because you can break the ice, you don't get into the telephone game, and we know this in our company, we have a lot of virtual, we have 2 offices, East Coast, West Coast. The telephone game, which everyone knows, it changes by the time it gets around the horn.
Yeah.
So that effect of translation is overhead. It's overhead
because you have to unwind it, or you have to explain it.
Yeah,
or you have to,
cycle time.
Versus, hey, let's get in a room. Yeah, here's what it looks like. Let's draw a picture. We all agree. No, I don't. Boom, done.
Well, that's not what he said. When you said that changed. So it just disconnects.
It's asynchronous versus synchronous communication.
You have to have a mechanism. And this came up, by the way, in my crypto talk with Dan. Protocols are coming out because now new protocols, he was talking about this thing called the growth protocol. They have tokens that they call growth tokens. It's almost like a mortgage-backed security. Okay, it's like, and he's like, imagine being in the mortgage-backed securities in 2001. If you got in early, you would have made $1 billion. He says that's what's happening in crypto. You're starting to see wealth creation patterns where you can put tokens on certain instruments, and then they're called growth tokens. You buy them. They're almost like NFTs.
What is it, like a tracking stock? That's tied to
I'm like, we have to do
asset?
a deep dive. He didn't go into detail, but I'm like, I get what you're saying. We're going to follow. I'm going to follow. I don't know the answer. Well, he was kind of like, he was way above my pay grade in terms of like, because he's like a hedge fund guy. It's like he mortgage backs. I'm like, okay, mortgage backs. Okay, I know how that works. I'm like in my head thinking, okay, I know how that works. I'm like, shit, I don't really know how it works, but I kind of know. But he's an expert.
Yeah, it's a product that they package and then resell.
Yeah, and it's asset and has growth, and everyone gets this instrument. So he's saying that stuff's developing fast.
That
in crypto.
scares me, dude. That's like as long as the real estate market goes up, that mortgage-backed
short,
security
baby.
looks good. But as long as crypto's going up, that's good. When crypto
I
goes
smell
down,
money.
MicroStrategy,
What's that
look out
scene
below.
in Big Eyes? What's that smell? I smell money. The Jenga, the AAAs and a pile
Ryan
of shit.
Gosling. Yeah, great scene.
But this is what I think people are afraid of with crypto. But crypto has a community, and it's changing, and it's growing, maturing, and I think that's again back to full circle. The world's changing.
Did you guys talk a lot about regulation? I mean, that's kind of the thing that everybody's waiting for is, give us some guidelines. And Gensler used to say, well, no, the laws are there. We're just enforcing them. But
he actually used the word hostile environment.
It was hostile.
He said we were in a hostile environment for minimum 3 years, if not 4. Everyone was bunkered in. Now you have an in-migration into the U.S., there's growth, and these companies are making. One company, he told me off camera, is $2.5 billion in revenue. They're a $25 billion market cap company if they go public tomorrow, but there's no crypto IPOs.
Yeah.
So there's no mechanism for liquidity.
Yeah, because they get debanked.
And so, well, he talked about debanking, the hostile environment. Yeah, and so he started getting into this. Okay, imagine if these cryptos start going public, then things like growth tokens will emerge.
Yeah.
So there's not enough marketplace right now in the world, even outside the United States. So I think what they're hoping for is with Trump and the Treasury Secretary is to say, hey, NYSE, hey, exchanges, you need to think about preparing for these companies because they are making the market. They're creating growth, they're creating liquidity.
They're innovating.
And they're creating value, and they're actually high performing. They meet the requirements.
Well, so
for all the things, that would be a great company.
If public policy puts out some guidelines that are geared toward crypto, and the SEC has new sort of rules to follow, and then, like you said, you start with stable coins because it's pinned to the dollar, and then if you start to see IPOs coming out on New York Stock Exchange and elsewhere, then that's when you get that innovation flywheel and the momentum, the capital markets flywheel. And then my point is, once it starts, Liz Warren's not going to be able to reel it back.
I mean, Dan Furrier basically is doing crypto growth investing. I mean, just think about that. That's like an asset class in and of itself. Yeah. So go back to when we started doing crypto, 2012, 2015, 2018. We were covering all that. That maturization, those were the pioneers. Those were the ones who made the Bitcoin billionaires and other people monetizing it. It went crazy. You had the shit coins. You had the ICO scam. NFTs went up and down. People did make money and lost it all, but now you have really durable ventures that were actually created by entrepreneurs, a lot of young guns. They are in a growth equity mode, but their equity is on chain. So it's like, okay, so that's mind-blowing, people. In the old world. So you have an old way and a new way. And again, back what I said at the top, you have these paradigms. You have these dominant paradigms like old banking that are going to be, that over generations of causality, workflows, math, process, completely being disrupted by the propensity factor, I call it. So, it's just a whole nother level of, like, it's like, Darwinism, great. I understand that math, but like, you start getting into more of that open, collective intelligence, new information, interactions, marketplaces. You're going to have asymmetry at first, and then dislocation, arbitrage, and then you're going to see more stability. So it always takes that track. I mean, any innovation. I mean, think about it, Dave. Like,
yeah. Well, one of the things that you pointed out on an earlier CUBE pod, one of the earliest CUBE pods, you said, the AI brain drain out of crypto into AI.
Yeah.
And that happened. And because of the toxic environment.
Yeah.
But now and I said those two worlds are going to eventually come together with more favorable public policy, those two worlds will come together. And that's a Cambrian explosion of value creation. I mean, let's face it, crypto, we'll see. I mean, if it's durable, I think it will be, but it's the greatest asset class in the history of asset classes. I mean, Bitcoin, Ethereum, Solana, I mean, it's just, they're insane.
Yeah.
And the thing is, okay, Bitcoin, store of value, fine, digital gold, but other cryptos, there's innovation going on. There's coders, there's developers, there's ecosystems forming, there's Web 3.0, and there's new protocols, and that the premise of crypto, which I've always loved, is that the internet giants have co-opted all the main protocols, HTTP, and all the email protocols that support Gmail, et cetera. Well, a new breed of innovation and protocols and technology is emerging, and anybody can play. Anybody can invest. You can buy a fraction of a crypto. It's a beautiful thing, and you got to do your homework and pick your spots. But yeah, 10x Bitcoin valuation. I believe that. Did he give a time frame?
No, he was like, he didn't want to talk because I asked him about the M&A question, and he didn't want to. He's like, I have an M&A deal going down where will be the biggest in crypto ever. It'll be on all the front pages of every magazine, every newspaper. I'm like, I'm gotta be
overseas.
I think it might be exchange. Don't know. It's going to be. He was very tight. I tried to poke at him and chip away at the news, and like he said he'll give us the scoop, but Well, I mean, I'm still kind of buzzed from the
you should be. That was awesome.
I got to say, it is pretty intoxicating up there. It's rarefied air up on that podium, Dave, and I know you were not on. I'm bummed you couldn't get in there.
No, don't be. That was great.
But it was
cheering you on.
Not what I expected.
What was it like?
It was kind of like surreal in the sense of, okay, it's less of like the view, because we see it from our balcony, we get the exchange, we were here. But when you're on the podium, it's small.
Right.
Okay, but it's
only like 15 people.
It's a ceremonial process. It's like tribal. It's like they're closing the market. So when you realize that you're closing the market, and I was waiting to go up, and I hear people, he's getting out. The traders are like on the floor, he's getting out. And they're all yelling at each other because people, it's the end of the day, trades are happening. So the ones who are trading here, we're getting there. And so you realize that the market's closing, but it was more of the ceremonial tradition of the NYSE. And then everyone's screaming that there's a protocol. So at 30 seconds left, everyone starts clapping, so you get in the buzz going, everyone's watching. And then
that's what we're doing. We're down on the floor going,
yeah,
Johnny!
At 3:59, 45 seconds, there's two people in the close. There's two things that happen. Someone presses the button. It's the button, basically. It's a button that rings the bell. They have to hold the button down for 15 seconds because that's the bell ringing. If he takes the hand off the button, that's a miss. So the pressure is, got to keep the button down. And
is there a clock?
The Reddit guy.
Is there a timer?
Yeah, you can see the clock in front of you. So the Reddit guy was holding the button down. You have two people. The button pusher, that was Reddit. That's their big IPO, of course.
And then
he gets
the
top
gavel.
dog. And the gavel was Time, the big brand. And so they do the bell, and you're cheering full throttle. So everyone's amped up. The blood's flowing. And then after the bells ring, there's 3 hammers of the gavel. And the advice is swing it hard. Don't worry about breaking it because that would be like an honor.
Try to break it.
Try to break it. It's like a judge. Stand down. So you got the gavel, and so you're up there. I'm in the front there. You saw me up there. I'm cheering away. And so I think that was cool because of the tribal nature of the protocol tradition and the market closing. So that was like an unexpected buzz. Endorphins pumping. So I got to say that was pretty good. We can end our pod on the bell if we want. I mean,
that's
if you
great.
want. I mean, what was your take watching down? What was the vibe down on the floor?
Well, first of all, having my co-CEO up there was an honor, and I was like, "There's John." And, Brian and I were down high-fiving. Yeah. Coco was there. Martha was there, so that was kind of very cool. And then you were right up front, so I got some really good pictures of you. Yeah. And like you said, I never really paid close attention to it. It is smaller. And of course, I was counting. There were like 14 or 15 people up there, and it was a rush to be there. And it seems, the opening bell seems to be a little louder, right? You've been there for the opening bell. You're right in front of the CNBC set, and when Kramer's in there, you can't even hear him. him and David Faber and the other guys. So it wasn't as loud, but that's because they didn't have like armies of people coming in with a company like you did for, Rubrik, I'm sure had like
massive
hundreds of people, right?
Yeah.
And so, but it was so cool and intimate, and just seeing you up there. And I like how you described it. I didn't realize that there was 2 people involved.
Yeah, there's 2 people, and they signed the book too. So that before there's a photo op under the bell where we take our photos.
Yeah, they were
sometimes.
like an amoeba moving around. It was all these photo ops.
It was very ceremonial
Yeah.
and traditional, kind of like almost like think like the king and queen didn't have their ceremonies in England, but the 2 people that were doing the ceremony sign a book. They're closing the market. They put their name and their company.
Oh, it's
and
official.
It's officially on the record, and so that was kind of
And
fun.
you're in there with the president. And the other thing too is, it starts in the boardroom upstairs on the 6th floor, which is like the most beautiful room in the New York Stock Exchange.
Yeah.
Like coffered ceilings and gold inlays and just beautiful media, unbelievable sound system. So that's where they had the event today. So they gather in there. You had your badge, I don't know if you have it with you, your badge, the silver badge, had a blue line on it. And the blue line, like the New York Stock Exchange, kind of like the logo, the ICE logo, that blue line, that signified all the people that were going to be in the podium. Yeah, there it is. And everybody else had, can you guys see that? Everybody else had
right there, yeah. It's on the
everybody
video.
else had the, just the
That was basically
the silver piece. So then what they did is they took all 14 or 15, however many it was of you, said, okay, you guys come with us. And then everybody else, we had your entourage, you guys come with us, we're going down to the floor, we're going to cheer, bring your clapping, get loud. It was, to your point about it's an experience, it was for us too.
Yeah.
Because we were there to support you. So that was very cool.
It was a great ceremony. Joe Benaroche, who's in charge, he ran a great program. His talk was phenomenal. He had a very strong, he kind of echoed, Lynn Martin set the tone of the whole partnership, of the media partnership, laid out the whole, she's like the chief executive. Of course, her narrative is phenomenal. I recorded that. Joe Benaroche really talked about the purpose of the meeting, and it was really authentic. Right? He's like, look, we want to partner with you. We're opening up. He was also part of the ceremony. I got a couple photos with him.
He's former ex too. He knows content. He knows media. Well, that's the other thing. You had marketing people. You had content people. You had comms people.
NYSE team was
capital
in full
markets
display.
people, and they were just like, we are open for media business. Come on in.
It was such a unifying statement from the NYSE team. Every department was there. The production team, I thought, did. Of course, I'm watching all the camera guys. Like they were on point. Ian's team. Ian Wolf, if you're watching, you guys did a great job. Phenomenal execution. But you had the marketing team, you had the listings person, you had the content team, you had Brian Bauman with Wired, and then you had a special guest, the book author. We would have the books here, but he did a fireside chat. It was basically like, this is the team. And it showed the community that they're open for business. But if you're a listing company, you'd be like, okay, I mean, this is what I want. That's what I want.
Yeah.
I want more media. I want to have community. So the community vibe was very strong.
And
so
I want content.
I want content, yeah, and it's a content market. Like Trinity had a great opening line, Trinity Chavez, when she did her talk. The stories are here. They're happening here, but they're also happening out there. And she made a point to implement her plan, which she goes to events like us. She goes to Money 2020. She's been to RSA, Black Hat, Salesforce. So NYSE, and again, is going out, and we're partnering with theCUBE. They're like the NFL app. NFL TV, vertical TV, we're ESPN of tech. It's a good fit. So, it's a great partnership.
I remember when we got these are our badges, right?
Yeah.
What'd they say? Welcome to the machine.
It is a machine. And
it is a machine.
Yeah.
It really is amazing.
Yeah, but they're they're rule-based here, but what they realize is that there's action going outside. So they're syndicating the NYSE. Basically,
yeah,
they're saying, "Hey, we'll take it out."
You think it's this old stodgy, institution? It's not. It's like really innovative. They're tech savvy. They're agile.
Their marketing team gave great examples of partnerships.
Oh, amazing!
Joint marketing,
amazing.
So the value.
Plus, when you're an IPO listed company here, they put down some really great MDF and support, and that's part of what this media is
it's
all
community.
about.
It's making people successful.
Yeah.
Again, transactional versus relationship. That's where that's where they are. They have a relationship. So amazing time, Dave. I'm proud of our team, SiliconANGLE and theCUBE, the entire team. To be up there with those brands means we're kind of at that point where we're up and down from tech, deep tech, up to mainstream. So anyone listening to the pod, thank you for listening. Of course, check out SiliconANGLE.com, theCUBE.net, theCUBEresearch.com, and again, just continue. We got our Buttonwood Room podium. And of course, the Buttonwood Agreement.
Yeah.
It was kind of like today for media. It's like it was
right. That's right.
in fact, we should put the Buttonwood logo. This is the original room we're in, the original Bell room, named after the famous Buttonwood Agreement. So it's phenomenal. Let's play out with our opening bell. If Ken and Coney, thanks to you guys for all the hard work. They set up, and Chuck back at the ranch, and the whole team, on our production team. This is phase one of our CUBE build out. We've got our mobile studio here, which will stay in New York. Shout out to Brian Bauman, Coco Adams, and Elliot and Martha, and our whole team here. CUBE Wired, NYSE Wired, great stuff. We'll play it out. Ken, play us out with a closing bell. Here is the closing bell video. If you're listening, it's going to be a bell. If you're watching, I'm right there in the front. Per Brian Bauman's advice, Dave. He's like, get to the front.
Good call, John. Elbow your way in there, I was saying. He's like, don't worry about me,
Hat
Dave.
tip to Brian, and then Trinity, get up the stairs and get to the right. She said, get on the left side, John. It's a good side. Like thanks, Trinity.
Our logo was on the other side. That was
I kind of missed that. But. All right, play us out.